The UK heads to the polls on December the 12th, and in these volatile Brexit times, everything is up for grabs. If you believe the polls, Boris Johnson's Conservative Party is on for a majority, and that could be good for the pound initially. The Brexit deal is likely to be ratified in January, and that could avoid a damaging no-deal exit. But some of that initial optimism could fade as messy negotiations begin on extending the transition period beyond 2020. Of course, polls have been wrong before, and if the Conservatives fail to form a majority, then Labour may well have the numbers to form a government. Labour and its potential Westminster partners are open to a second referendum, and this would be taken positively by markets, particularly given that without an outright majority, Labour is unlikely to find support for its bolder economic pledges. But as we head into 2020, that second referendum process could get derailed. So that, and the increased risk of another Scottish independence referendum, could see some nervousness creep back into markets, particularly if Labour's working majority is relatively fragile. What if neither major party can form a government? Well, that could be a nightmare scenario for financial markets because it would raise urgent questions about whether that January Brexit deadline could be extended again. So there's plenty of room for big market moves. And if there's one thing we've learned over the last few years, is to expect the unexpected when the UK goes to the polls.